welcome to the Strategic Success Podcast. I'm your host, Courtney Fricke. Thanks for tuning in. Lisa, I'm excited to have you. So if you don't mind, go ahead and introduce yourself. Tell us who you are, where you're from, and then what do you do in real estate?
Okay, my name is Lisa Englehart. I have my real estate broker's license, but I transitioned
I knew that.
into a real estate investor in 2016, full time.
Now, so were you a real estate broker for a long time? Real estate agent, real estate broker?
Yes, I used to be in the REO industry, so I would list REO properties for banks, government institutions. I did that for a good 10 straight years.
Wow, so is that all been here in the Virginia area?
In the Richmond, Virginia area, yes.
Okay, that's a big deal. Okay. And now, did you do some of that, when you did that for 10 years, did you do that in the '08 crash? Like in the height of it?
I got into it in '09. I received a phone call. I was actually sitting in a model home, and I received a phone call from somebody that I knew, and they said, hey, at a local big bank in Richmond, and they said, hey, would you be interested in listing any of our REO properties? We don't have anybody, and we've got all these, properties coming. I didn't even know what REO was, and I just said yes because I knew,
you need business.
Something was going on,
yeah.
right? And for her to ask me that, so that's how that broke me into that business. And then I, of course, learned on my own. I didn't have anybody to teach me. I had to learn by trial and error.
Or baptism by fire.
Exactly.
Huh?
So yeah. I went on to become one of the largest REO listing agents in the Richmond area.
Oh, wow. So when you were sitting in that model home, presumably for a builder, right?
Yes.
And how long were you an agent at that point?
I was an agent about 7 years at that point.
So you had enough of a track record. You had relationship with those banks, with the one that called you. Okay, very, very interesting. I don't think I knew that.
Yes.
Okay, so fast forward to 2016. What happened then that kind of shifted things for you?
Burnout.
Okay.
I was working 7 days a week, literally.
Yeah.
On the REO properties because it's a lot to manage those.
Yeah.
And I kept seeing this name come across my desk because this gentleman was buying a lot of my foreclosures and he was getting a good deal, and along with a lot of other people, but I kept seeing his name come across my desk, and it was Jim Ingersoll.
I was literally about to say,
yeah,
is this Jim?
Yes.
Yeah. So
and I had to figure out who he was. I said, I've got to figure out who this guy is because he's somebody I need to know. So that's
excellent. So you and I are here at Dealmaker in Virginia that Jim has been putting on, I think, since 2012. He's been doing it for a long time. There's almost 300 people in the room next to us, and so that's a big deal. Jim is a big deal here in Richmond, and there's no surprise that his name was consistently, there in the public records, but for sure when you're specializing in REOs, you're seeing, hey, what are these people doing? And let me go figure out. So what else happened after that?
So after that, I went, like I said, I was burnt out. I had my own brokerage. I had agents that worked for me. Okay. We were a small boutique brokerage, but I had the burnout. I didn't have the who's working for me. So I became burned out, and I looked him up because I wanted to know who he was. And within 30 days, he was having Dealmaker. And I was like, I'm going to sign up, and I did. And that was a life changer for me because I had always wanted to be a real estate investor, and I never had the opportunity to do that because I always thought you had to have your own money to do that.
So I cannot tell you how many real estate agents and brokers that I've sat across who had been in the business for so long, some of them 20, 30 years, and said, Courtney, I've always wanted to be an investor, but there was some sort of mental block, or there wasn't a lack of intention. They're like, oh, I've been meaning to buy properties for the last 20 years, but I just never got around to it, right?
Lack of education.
That's a huge part. And so that's huge. Okay, so you wanted something different because of the burnout. What made you be willing to go to, a seminar you had to pay to attend?
I wanted change. And when I looked at what Dealmaker was about, I said, I've just got to go to this. I've got to make a change, and only I can make that change for myself. So, it was a big deal for me.
Tell me about that first Dealmaker for you.
I was I was trying to take it all in. It was a lot to absorb because it was totally different than what I was used to. I was used to meeting buyers and working with sellers and primarily in that long time stretch, I was working for REO asset managers, and there wasn't any personal face-to-face communication. It was all through email. So I'd kind of lost that connection that I used to have with people because it was all kind of behind the scenes, just through email.
It was transactional.
It was transaction. So when I went to this, I literally left there like a little confused because it was a lot to take in, but yes, but also like I knew I had a plan. And I did. When I left there, I set a deadline. I went back, I mean, I planned it, but when I went back to the office, I gave notice to all of my agents. And I told them that they had until November 1st, this was I think in like March maybe, they had until November 1st to go hang their license with another broker.
That's huge.
And not only that, I gave back 23 REO listings, including pretty good properties.
Yeah, so
because it wasn't
higher end or something like that.
It wasn't all about, the listing for me and the money for me. It was about the peace of mind. Now, looking back, I wish I had done that a little bit different because I believe I could have actually sold that part of my business or maybe recaptured some income off of that.
Yeah.
Given up my clients that I worked so hard for.
Yeah.
I educated myself. I went to conferences constantly. I was constantly investing in myself like I do now. But
as an REO agent, you were attending conferences to learn about REO listings and educating yourself so that you could be the expert, right? Which is why you got the consistent business.
And it's like Dealmaker and other real estate investing events. You go there for the network. Yeah. So I would go to these places for the network because that's where the REO asset managers were.
Let's break that down. Because I understand what an asset manager is, but if someone's listening to this, especially if it's a real estate agent who said like, hey, what the heck is that, right? Can you explain, first of all, what an REO is?
Yes. Okay, REO stands for real estate owned. Mm-hmm. And just to give you like a simple layman's terms of how that works, when a property is getting ready to foreclose, it goes to the courthouse steps. In Virginia, it goes to the courthouse steps. There's a date set, it goes to the courthouse steps, and the foreclosure attorney actually conducts the auction for the bank. If it sells at the auction, meaning the attorney is on the phone with the bank or they have a set number that they know that they can accept, but if not, they're on the phone, getting a bid, communicating with the bid. And if they accept the deal, then it ends right then. But if it does not sell, which a lot of them don't, then it becomes a real estate owned property and it goes back to the bank.
Yep, so these are those bank-owned properties.
And once it goes back to the bank, like literally within 1 or 2 days, they're assigning it to an REO listing agent. And that's when I would get involved.
And they being the asset managers.
Okay, so it is then assigned to an asset manager. Once the bank takes it back that day at the sale, it's assigned to an asset manager, which that asset manager could be an outsourced company, but it's an asset manager is in charge of that property, and the asset manager picks and chooses who they want to list and manage the property for them. So it's important to build those relationships.
So they're the key decision maker because they're probably overseeing a portfolio of these assets for the bank?
Yes.
And so it's their job to make sure that, first of all, those assets are protected for the bank, right? Like it's their responsibility, but also whatever the bank's directive is, to sell them things like that, they work through the process.
Right.
So, okay, so then they're the ones who they're choosing which REO agent to get the listing.
They're choosing the agent. They're looking for someone in close proximity, but they're also looking at their relationship and how that agent responds. Mm-hmm. That's key, and I think that was part of my success in the business is I always responded right away to my asset managers, and they liked that because they knew that I was taking care of that property for them.
I was talking with someone who was in the real estate lead business, right? Like they'd create a lot of leads, and sometimes they would give a lead away for free to someone just to see how they would respond, just to make sure they'd respect the lead, right? Because think about it, if someone like, oh, I'll get to it when I get to it, they're like, well, you can't be trusted. I could give you 1,000 leads.
That's right.
But how do I know you're going to be, responsive, responsible, and can be trusted? So that's an excellent point.
And And I would get properties really outside of my area.
Yeah.
I would travel up to 50 miles, even more for some,
Oh, wow.
because they knew that I would take care of it. And you have to take the good with the bad in this business. You can't turn down. That happened to me in the beginning.
Yeah.
I was given, my second property was a little house in a really bad area in Richmond. And I'll never forget this. I told my husband, I'm like, I don't want that property. I'm not going in that area. And he looked at me and he said, Lisa, you have to take the good with the bad. If you turn that property down, you're not going to get any more properties. And he was so right.
Yep.
I would have, if I had done that, I would have been doomed.
You see, so many people don't realize that you have to do this business. It's the long-term thinkers that get rewarded, right? Short-term people are,
right.
in the short term, well, I don't want to go to that part of town, that, whatever that looks like, right?
Right.
But being short-sighted can cut you off for future business. That's when people burn bridges with relationships and stuff like that, right?
That's right.
It's the people who go around, another investor, or who go around an agent, or, things like that. That's, relationship burning bridges, right? It's short-sighted. But then guess what? They're going to find that person later on in the business, and it's going to right? It's going to come back around to them. So I think that's brilliant. You said, hey, I'm willing to do something I don't really want to do, but I'm doing it to sow into this relationship and hoping that I can reap more listings, right? That they can trust me with more. That's brilliant.
And it worked.
Yeah. Here on the Strategic Success Podcast, we love talking about it's the mindsets and it's the way that you go about doing this business. So one of those is that thinking long term. So, all right, so you get out of the REO business, you go to Deal Maker, and then you make this drastic change. In March, you give your agents until November to go hang their license somewhere else. And I do think it's smart that you said, hey, if I could go back differently, I would have maybe sold your REO, business or something like that. In New Orleans one time, I don't smoke cigars, but I happened to end up at a cigar bar, funny enough. And I was there sitting next to a fund manager from New York, and randomly sit next to him, and he goes, you know what I don't like about real estate people? They don't know when to get off the ride, like the roller coaster ride. And I remember it got me thinking a lot, is that first, a lot of us don't know when it's a good time to exit, but then most of us don't have a plan to exit either, right? Like, whether it's into the next phase of our investing career or real estate career, anything like that, that we don't really have a plan, right? And so I think that's an important part to that is yeah, sure, in hindsight 2020, it's easier to say, hey, maybe I could have done that. But I think that's a big philosophy there.
I would say I probably didn't have a really good plan, but it worked for me.
Yeah.
But I also had my husband as my backup.
Right.
So I could make that.
Meaning like his income.
Yes, it enabled me to make that transition.
Yeah, so that's okay. So you made this drastic change. Okay, so you're telling agents go hang your license somewhere else. You give up your REO listings, even some big ones, and then so you're burning bridges yourself. You're saying, hey, look, I'm going all in on this. So talk to me about what happened next in that part of your process.
Well, I wanted to start flipping houses because that was pretty big during that time frame. We were still seeing
So 2016.
2016.
When the market was starting to do this.
So I ended up buying a couple of properties. I would do one at a time. I started out at one at a time, which I highly recommend.
Yep.
And then after we finished it, when I say we, I'm talking about my husband and I, because my husband played a big part in everything that I did. And he was and he still is, he's a builder. He was a custom home builder at the time.
Okay.
So I had been helping him for, at the time, probably 15 years.
Okay.
As well as trying to do my REO. So that's
was that the model home you were in early on,
no,
or that different builder?
That was a development. I put 2 farm deals together and took it to a developer, and part of the deal was that I would get 165 listings for putting the deal together and seeing it through zoning.
Hold on, let's break this one down.
Okay.
Because so there's a book. There's a book called it's the old school version is called Creative Finance by James Misko.
Okay.
The new version is How to Finance Any Real Estate in Any Market, at any time by James Misko. So they updated the title. James was a realtor, so a real estate agent, who had a CCIM designation as well. But he was also an investor. And it's like 45 chapters of 45 different ways he either operated as an investor or on behalf of his clients as an agent. And so he was super creative. I love that book because there's a lot of meat and potatoes in it, but it's one of those ones where it's like, hey guys, Courtney, Fricke here. We've got Aussie Steve. And look, if you have a deal that needs to get moved, Southeast Louisiana, even in South Mississippi, we're your folks. We are the largest dispo company, really in the greater New Orleans area, even Southeast Louisiana. We have great contacts in South Mississippi as well. Steve, why do we move more deals than others?
Just we're very deep in this market. So Greater New Orleans can be really confusing for national wholesalers. The comps are hard. We change block for block. We got flood zones. You know, we get a lot of hurricanes and the likes. And just a lot of the national platforms don't have the buyers on their list. So we are deep with buyers, but we're deep with relationships, which is really important in this market. So we love JVing with out-of-state investors.
Like I said, we do a ton of business with other investors. So go to homebuyerlouisiana.com/Courtney. Fill out the information, we'll get in touch with you and we'll move this deal along. I love it when agents get outside the transactional, just helping sellers sell and buyers buy. So let's talk through this deal and kind of break down, because I already love everything I'm hearing. So what was it? 2 farms?
Okay, so that was my second transaction as a real estate agent for
Ever?
In 2002. So I played on this farm behind my house as a kid.
Okay.
And the farm went to an estate, and the estate was broke up. So it ended up being 50 acres, and I think it was like 40, something like that. Maybe 50, I can't remember the exact acreage. But it ended up getting broken up in an estate. And so it was 2 separate pieces, and I was in conversation with my brother, and he's like, that house, that land is probably getting ready to come up. It's separated from the farmhouse, from the old farm. It was a farm, working farm. And so I did what I do today. I tracked down the seller. They were in West Virginia, and I sent him a letter. I mean, it's kind of weird because I still do that today, right?
Right.
And he responded, and he let me know that it was the executor responded. And he was an older man, and told me that they did want to sell the farm. He was the executor and they would be selling the farm. And my brother said that he knew some developers that had my brother is a plumber, so he did work for them on their new build. So they told him, if you know anybody that can bring us any land deals, we'll work out a deal with them where they get the listings if we can create the subdivision. So I went, he introduced me to them, my brother did, and I went and met with them and ended up, I didn't know what I was doing. I really
But
didn't
you
know
were
what I was
figuring
doing.
it out.
I was
which is what I love about you. You were figuring it out.
Figure outable, that's my favorite word. Figure outable, you always can figure it out. So I went to them, they actually told me the verbiage they wanted in the contract. So I got all that worked out, got that piece under contract. And then I had to go see the man that inherited the farmhouse with the rest of the acreage. And
So not the executor, but someone else?
I already got that one under contract. So it took me 6 more months to get the other piece under contract, because that gentleman thought that Walmart was going to come in and buy all of it from him. So his idea of
was worth gold.
His expectations were a lot higher than what he was really going to get.
Yeah.
And so I finally was able to get that. And there was some relationship building there because he didn't trust me. He wouldn't look at me. He may have had some bad experiences with real estate people, I'm not sure, but I did build a relationship with him. And that's why it took me 6 months to get that piece under contract. Yeah. And then once we got that piece under contract, I already had connections with getting to know the county board of supervisor and the planning commissioner for that district, from that district where I grew up.
Because of your husband's building?
Because of my brother and the
plumbing,
family, okay. And we kind of knew the name because everybody kind of knows each other.
Small town.
Yeah.
Yep, I know it.
So we really took it to them and said, hey, what do you want to see here? We're thinking about a 55 and over community. And they agreed to it. So we worked that out, and I say probably the developer did more of the work, but I was in on it because I was learning. I was learning how to do all of this.
Yeah.
So I was involved in, I put together the community meeting, because you have to have a community meeting and you really want everybody on board because the neighbors can ruin it.
NIMBYism. right?
Right.
The not in my backyard folks.
That's not in my backyard.
Yep.
And so we coordinated a meeting at the library, and then it went through zoning, everything passed. I'm trying to speed up the long
Sure.
amount of time.
It's a long process. I've done one myself, and it's a long process, but it's important to know the process. It doesn't happen overnight.
Right. Doesn't happen overnight.
So you stuck with it.
I stuck with it, and it took about 4 years, believe it or not, before they broke ground.
Oh, wow.
It was a long process.
So you helped set up the deal with you. So you brought in the 2 estates. Okay?
Yes.
Estate 1, estate 2. Did you get paid on that a commission when they bought it?
I got paid on one.
Okay.
It was like an $11,000 commission at the time, which was a lot back in 2002 and 2003.
So then, but you also secured the right to get the listings.
Yes.
Did you do any of that and you don't have to share, but did you do any of that in paperwork?
I did do it in paperwork, but there's more to the story.
Okay.
That didn't turn out very well.
Okay.
Okay. It's pretty emotional, but yeah.
So, and if you'd want to dive into it, you don't have to, but a part of that is it's important because, well, especially deals that take time, if you don't have it in writing, you can easily, what was once a handshake, and look, we're both from, the country.
The handshake.
Handshake deals, they get you nowhere.
They do.
I love them in premise, but in principle, you got to put it in writing. Because what
do.
if that person that you shook hands with gets hit by a bus,
That's right.
right? And then, what if the market changed and all of a sudden, what they were going to do turns out to be extremely more profitable, and then they say, hey, you know what? I'm going to send my wife to go get her real estate license to then list all these,
Yeah.
something like that.
Yeah. We had a good thing going.
Yeah.
The biggest issue we had was they told the planning commissioner and the board of supervisor that it was going to be about 175,000 that they were building with these houses. That would be the price range. And they ended up like starting at 240 and 260. And it really threw the whole concept off.
Sure.
So there weren't many buyers, okay? There weren't many buyers. The builder was blaming the real estate agent. The real estate agent was blaming the bad product because they were cookie cutter, tiny little, 1,100 square foot houses. And we were getting the people in, coming through the door. I had it on the local NBC channel as a commercial, spending 10 grand a month. I was spending 10 grand a month. People were rolling in. We had people sign cards. I mean, I had proof of the people that were coming in, but I couldn't get through to them that these people didn't want to go from a king size bed to a queen bed.
Yeah.
Right?
So the product, that's very,
product.
very interesting. So I'm assuming the commission or the council, whoever it was for y'all, was very interested because it was more an affordable price point, right?
And there had never been a 55 and over community in this whole entire area. And the county is huge. So this was like a big deal.
Yeah.
It was a big deal.
So that's tough. Okay, so thank you for breaking that down, but let's talk through that. So first of all, I love that on your second deal, you're swinging for the fences saying, I'll figure it out, right?
Figure it out.
And then you're working through, and then you ultimately did you end up doing a good bit of listings eventually through those?
I did a good bit of listings, and then it kind of went south because they were foreclosed on.
The builder.
But prior to that,
because this was this closer to getting to, at this point when they were getting foreclosed on? When was that?
well, let me step back for a few minutes. The three-man builder
Development.
broke up.
Okay.
Okay.
Time and circumstance changes everything always.
One broke off from the other two. The other two technically, they still owned the company that I had my agreement with. The third one that pulled out had his own, he came out of that agreement, okay? So he didn't have an agreement with me anymore.
Yep.
These two did, he didn't. And he wanted to bring in his best friend who was a realtor to list the new homes they were going to start building.
Did he buy some of the lots or take some of that out with him?
Well, he was like the head honcho, so he was the main guy.
Yeah.
So he pulled out. he started to do his own thing and brought in his agent, which, you know, for me, that they were my listings. I worked hard for those listings.
So you're bringing the attention to the whole neighborhood, not just your listings.
Yes, exactly. So to move past that, and I mean, I'm open to talking about any of it. What ended up happening is there were 4 sections to this. This is 165 lots, okay, and they were breaking it down by section. Well, the subdivision failed, and so the other sections went bankrupt. They went bankrupt. The bank took them. The bank took them.
That happens more than people realize. And so for everyone who loves jumping into development, they don't realize those go back to the bank too.
That's right.
Right? You know, for various reasons. And so, okay, so moving on from here, you learned a lot as an agent, as an REO agent. You started off flipping, okay? And talk about where you're at today. What are you focusing on today?
New construction, particularly tiny homes. And I say tiny homes, I like to call them teeny homes.
Okay.
Because a lot of people associate tiny homes with wheels, and they're considered RVs. So I like to use the word teeny. I call mine teeny homes because they are stick-built on site. They're not modular. They're stick-built on site, and they range anywhere from 339 square feet up to 1,100 square feet.
Okay.
So my focus is like 1,200 square feet and under because it falls into the affordable category.
Okay.
They're more affordable.
So what took you in that direction?
I've always loved little houses. Somebody asked me that not too long ago, and I think it was in working with my husband. He did a lot of custom homes, but we also built some spec homes when I was an REO agent, even though I couldn't get involved in it as much because I was full-time doing that. But I would design the home, and then he would coordinate all of the building on it, and then I would list it. So it's kind of a good relationship there, all the way around. But they were larger homes, 2,000 square feet, 1,800 square feet, and they may not be considered large today, maybe 3,000.
Back then.
But back then it was pretty good, pretty good size. But the thing is when you build a spec home that size, it's risky. Because if it doesn't sell or if the market turns, you know, you've got to be able to do something with that house. And that happened to us back when the market crash of 08, 07, 08, 09-ish. We had 2 houses.
Nicer products.
And luckily they were 1,500 square feet, but it had a garage, 2-car attached garage. It was on 2.5 acres. And we didn't lose it, but thank goodness, because some people did lose. Builders lost houses. We put a renter in it, and it happened to be somebody that we knew who had lost their house, but for just different circumstances.
Sure.
So we knew these people, and it gave them a place to live. It paid our mortgage.
Yeah.
And the taxes, and we did not make anything above that.
Yeah.
But
it helped you weather the storm.
We weathered the storm.
It was either Rothschild or Rockefeller that said, you know, sometimes it's not about winning, and it's just about to keep swimming.
That's right.
You know, surviving, right?
That's right.
And in difficult markets, that's the name of the game.
That's right.
So, okay, so you learned from that time that it's like, hey, look, the type of product that you have, okay, so that's a big deal. And then, so when you started doing these teeny homes, as you like to call them, are you doing them, you know, in the city? You doing them in the country? Tell me about what like a normal, you know, your the ones that you do.
I like rural.
Okay.
Because people tend to want to be outside of the city, and there's a lot less regulation. Now, some people tend to think that, you know, you can't build tiny homes everywhere. There could be restrictions. So I'll kind of clear that up now with that, because some people still ask that today. The main thing is there a minimum square footage by that county or a city for new construction? That's all you need to know.
Okay.
And so most counties, especially rural, they don't have a restriction.
Yeah.
Now,
that's
one
too
of the
detailed
counties,
for them.
right? Yeah. One of the counties that's very popular in kind of close to where we're sitting right now, they have a minimum 900 square foot requirement.
Okay.
But if you start going into rural counties, then there's really, most of them don't have any requirements for that.
Yeah. So in the city, it's, you need to check, it's gonna vary by city, by
is.
county. Louisiana, we call them parishes, right? By state.
Right.
Okay, and so you said you do what range, square footage?
Right around 300 to up to 1,200 total.
My very first property was a 851 square foot condo. And I feel like I had a ton of room for a single person, or even when I had someone come and live with me. So plenty of room, right? So I was showing you while we were here in Richmond, I was showing you how in San Antonio, a big production builder, so a builder that does a ton of volume, was doing a neighborhood where they had all these little houses. Now they did high density, one right after the other. Now these were stick built, from the ground up, just like a normal house, but they were a lot smaller. And I remember they got some pushback because, I think they were new construction, but like in, what was it, $160,000 for a new construction. I mean, nowhere in America can you find that.
Can't find it.
And so it's, a smaller house, and a lot of people said, you can't live in that, So talk to me about, I want to hear the good side of the tiny homes and things like that, but talk to me, what has been people's perception of, or have they been receptive to these tiny homes that you're doing?
They have with mine, just because they're really cute, and we built a really nice Class A project, product. And having that, nicely built, decorated, cute flower bed, sidewalks, it's different. Now, if I go in and use really dirt cheap materials and don't do, just have it looking cookie cutter, then I'm probably, no one's going to say anything nice about it. But I don't have that issue. Now, going to that, let's talk about that subdivision you were talking about where the density was high.
Yeah.
That could be
part of the issue.
The density.
Yeah.
Because
you can touch your neighbor right next door because it's that close.
In the developer and builder's defense, they have to have that density to make those numbers work, because they have to put in paved roads, curb and gutter,
all those things.
Probably concrete or paved driveways.
Yep.
They have to
a lot of extra cost. Yep.
They have a lot of cost involved in that. So if they don't have the high density, the numbers just won't work.
In volume. Yeah.
Right.
And then, but when you're doing it, you're usually doing it on a larger, lot, things like that, right?
It depends.
Yeah.
I try to break the lots down. I always try to find the zoning that's for two family.
Okay.
So if I decide to keep that property maybe as a rental or a short-term rental, then I can have, it's almost like having a duplex on your property.
When you put two of these tiny homes.
You have two on one lot.
That makes sense. Okay. And then talk to me about, everyone talks about affordable housing. What does affordable housing mean to you as someone who provides tiny homes?
Affordable housing to me is different than what I believe the government agencies.
So what does the government define it as that you think?
Rentals, apartments, mainly apartment rentals.
Yeah.
Rentals.
Yeah,
okay?
something where someone can go rent at an affordable. A lot of times my understanding too is that they look at what percentage of their income are they spending.
Yes.
Right? And so when there's, for example, their income is not a certain level, well, hey, so like in New Orleans, there was a report that came out because there was a news article I got quoted in. I was so nervous I wouldn't like how they were going to represent me in the article. It said 63% in New Orleans is what people pay toward their income toward housing, which is not sustainable, right?
It's not.
And so I understand there's a need, right? And many of us who, are housing providers, that we provide rentals, things like that, we understand there's an issue. So what does affordable housing mean to you?
To me, it means an affordable place for someone who works hard, wants to raise a family, and where they can actually afford to make a monthly mortgage payment, and they own the house.
Yeah.
Back when I bought my first house, it was $50,000. Now, yes, it's been a long time ago. I was 18 years old. I bought my first house.
Yeah.
And my payment was, I think, $500 a month, I think, at the time. Of course, that was a different time. but it was affordable. It was a 1,200 square foot house.
Yeah.
How many new subdivisions do you hear of today that are being developed for starter homes that are 1,200 square feet?
Yeah.
They're not. And the reason that you don't see them is because the cost of development. The stipulations that the municipalities, the cost, the engineering cost, the requirements, that's why I stay small. I like to just develop 10 acres and under, create my own lots.
Yeah.
Because that fits in with my number and more with affordable housing, what I
You can
call
keep it affordable.
You can
right.
keep it affordable. You
Yeah.
have to break it down because land cost is expensive. It's
Yes.
gone up.
Exactly.
So
and
you-
infrastructure, all of those things.
Infrastructure. So some people say, Lisa, why don't you create a tiny home community? I'm here in Virginia. Just the plan of development, if the property is zoned, and it probably wouldn't be for
You would
that
have to
amount
get
of
it
density,
rezoned.
I would have to rezone it. And just the application is about 10 pages. And most of that application is what my engineering firm would have to complete. So how much do you think I'm going to spend on that? It's a lot of money.
Yeah.
And it takes a lot of time. And then you
my
have to get it
understanding is over
approved.
10,000, right?
Oh yeah.
Maybe even 40.
Oh yeah.
And
it
so-
depends on how big it is.
Yep. And so it's people don't understand those what's called soft cost and hard cost when
Right.
it comes to development. And most people think, oh, it's easier said than done. So what I'm hearing you say is that your belief with affordable housing is it's not about somewhere where people can afford to rent. Ultimately, it's where someone can afford to buy,
Yes.
right? Because when someone buys, first of all, you can remove profit out the door in the sense of a landlord. Now, let's not talk about how the mortgage companies profit or, whatever. Let's not talk about all that stuff, but someone can then remove a third party landlord out of the picture. They can own, and then they can say, other than their cost, property tax, insurance, and the upkeep, they can do their best to keep it within their means, right? Versus with a landlord, right? Again, they're going to have profit on top, but ultimately, so many people, you're right, when they think of affordable housing, it's let's go build this apartment complex where either a portion or all of the units are available for rent at a affordable rate. So it's a portion of whatever market rent. Let's just say market rent's 1,000. Well, they may be between somewhere 400 to 700, depending on income. And everyone says, oh, that's affordable. So I love it. If you could learn one lesson sooner, and it something that impacted your career, if you learned it sooner, what would that be?
If I had known that I didn't have to have my own money, which I didn't have, to invest in real estate and buy houses and flip houses and build houses. I borrow all private money for all of it.
So private money from individuals.
I would have been able to get started a lot sooner. And I didn't learn that until I came to Jim's event.
And that's a huge thing. People often think, oh, well, I don't have the money part, I can't do that. Most of us don't.
Okay, so Quincy Long, I'm
so
going to
with
quote him.
Quest Trust. Yeah.
Quest Trust. He said today that basically you don't have to use your own money, right? It takes money to make money, but it doesn't have to be yours, is exactly what he said.
Yeah.
And then he said other people's money, which is OPM, which we're familiar with that term, but he also said OPI, other people's IRA.
Yes.
And that's what I do. I help investors grow their retirement accounts because they loan their money to me to build houses.
Yeah.
And in the past, when I was flipping houses, they would loan money to flip.
Yeah.
It's all about relationships.
It is. And I mean, plenty of those relationships I meet from events like this, going to the local investor meetups, wherever, someone lives, and just intentionally building those relationships. Look, no one is dealing with an infinite amount of money. We all have a finite amount. So whether your finite is real small or, okay, I only have 500,000 to work with. So whether it's $5 or 500,000, I always say the deals you do are a direct reflection of your skill sets, right? So if your skill set is, I only know how to use my own money, whether it's 5 or 500,000, okay, that's the deals you're going to do. But if you know how to use other people's money, so private money, and that's people using who have the IRAs, 401ks that are self-directed, whatever that may be, that is something you have to learn. You have to understand that skill set. You have to know how to have those conversations with people, how to structure those deals. And so, look, I've enjoyed having this conversation with you. Before we start to wrap some things up, any final thoughts on anything you'd like to share in regards to, either your journey, whether it is the affordable housing aspect, any final thoughts you'd like to share?
I would like to see more people get involved in building small homes, but there's a technique to that, because just going out here and buying a lot, you can't find a building lot or a piece of land at a decent price where the numbers work. So that's where the tricky part comes in. But if more people would get involved with that, I mean, some of the profits that we've made off of these small houses are bigger than what I would make on a 2,000 square foot house. So the profit's there. You just have to understand how to create that deal. I just wish more people would get involved. And I wish the government agencies would stop talking about affordable housing and how bad they need it for the last 20 years and start doing something about it. And it be for people that can have home ownership and not rent.
Yeah, that's great. So Lisa, how can people get in touch with you? If they maybe want to hear more about these teeny homes, they want to see them, where's a great way for people to connect with you further?
Probably social media, Facebook. I'm under Lisa K. Englehart, and my last name is spelled Englehart.
Okay.
TikTok, same at Lisa K. Englehart.
I'm sure people love the tiny houses on TikTok.
Yeah.
Yeah, excellent.
That's the best way to connect with me, through private messenger there.
Yeah.
But
okay.
yeah.
Excellent. Look, thank you so much for having this conversation with me, and yeah, I'm excited for you. I'm excited for what's ahead with you with these tiny homes.
Thank you for having me. Enjoyed it.
Sure thing.